Yes, good morning, all of you. So we were doing cash flow statement and we have completed cash flow from operating activity. Now we have to complete cash flow from investing activity. So for investing activities, what will be the major points? We have to focus on non-current assets. And if you remember the balance sheet, there are various components of non-current assets like fixed assets. And fixed assets are of two types, tangible and intangible. Then non-current investments, or if you are giving any loans and advances. So these all are your part of your non-current assets. So if you are uh, getting any money from these non-current assets, it will be an inflow for cash flow statement. And if you are purchasing any fixed asset or any non-current asset, then it will be a part of your, it will become actually outflow. So we have to consider accordingly. We have to identify the inflows as well as the outflows of investing activities. Only then we will be able to calculate the cash flow from investing activity. So when you will get money from your non-current assets, only when you are selling your non-current assets, like proceeds from sale of tangible or intangible fixed assets. So if you are selling any tangible or intangible fixed asset, it will give you cash. Cash will come in the business due to that. Then if you are selling your investments, means your non-current investments, then also you will get cash or cash equivalent. So it will also be an inflow. Then proceeds, loans and advances, repayment received. If you have given any loan and advance to anyone, it may be some other company, whether it is short term or long term. So if you are getting money back, the principal amount you are getting back, that is called repayment received. So it will be also an inflow. Then receipt of income from investments. So like if you are investing in any shares, then you will be receiving the dividend. Or you are investing in any debentures, then you will be receiving the interest. So whatever payment you are receiving as income on that fixed asset, that will also be an inflow. If you have invested in any land or in any property and you are receiving rent, that will also be a cash flow from investing activity. If you are receiving any dividend or interest, then it will also be an inflow of investing activity. Then obviously at some point of time, you will be purchasing these non-current assets also. If you are purchasing any investment or any other fixed asset, then it will be a outflow for your business. It will be a cash outflow for your business. It will result in reduction of your cash and cash equivalents. And if you are purchasing any investment, any non-current or current investment other than marketable securities, then it will also be an outflow. If you are giving any loan and advance, that will also be an outflow. So because these are outflow, we will show these amounts in brackets because it will reduce our cash and cash equivalents. So it will always be shown in brackets. So whenever your cash and cash equivalent is increasing, it will be written simply. But if due to some reason your cash and cash equivalents are reducing, then you will write these amounts always in brackets. So we will add the inflows separately and we will add the outflows separately, and then we will be able to decide whether we are getting any cash flow from investing activity or our cash is used in investing activity. Like if cash flow is more than cash used, then it will be answer will be cash flow from investing activity. But if cash used is more than from cash flow, then the answer will be cash used in investing activity. Now I want to proceed in this topic, and the major part of this topic is that you will never get information directly in the question. You will have to calculate a lot of information on your own from the given information in the question. So generally you will get some information regarding fixed assets and its depreciation in the question, and you are supposed to calculate the inflows and outflows on your own. So you should be well versed with this machinery account as you have studied this in class 11th syllabus in depreciation chapter. We have revised that topic also. So major entries in the machinery account will be what? At the time when you are purchasing any machinery, the major entry will be to bank account for the purchase of machinery. And it will be by bank account for the sale of machinery. So either you will be purchasing the machine or you will be selling the machine. In both cases, this entry will be done. So you should be knowing what will be the entry for purchase and what will be the entry for sale. Then for charging depreciation, the entry will be by depreciation. This is one major entry in this account. Then for if you are having any loss on sale of machinery, then it will be by profit and loss account. By profit and loss account, it will be a loss. And if you are having any profit or gain on sale of machinery, the entry will be to uh, profit and loss account, or you can write into statement of profit and loss to profit and loss account. This entry will be done for profit. So you should be knowing which entry will be written where and how it will be written. Okay. So these are the major entries in any fixed asset account. Here I have taken, for example, machinery account, but in every fixed asset account, these will be the major entries. For intangible assets, it can be the same case, but instead of writing depreciation, we will just write here by amortization. Okay. Now let's see this question. Global Limited has machinery written down value of which on 1st April 2018 was rupees 8,60,000. Now this is the opening balance given. So now you should be knowing how do we write the opening balances. This is the opening balance given 8,60,000 and this is the closing balance 9,50,000. So first we will write down the opening balance to balance brought down 8,60,000. And on 31st March 2019 it was 9,50,000. So we will write here closing balance by balance carried down 9,50,000. Please be particular about how to write the opening balance and closing balance. Some students, what they generally do, they write closing balance here. Your closing balance should not be in the first line. Closing balance should always be in after 3-4 lines. You know how to calculate the closing balance, that's why I'm saying. Depreciation for the year was rupees 40,000. So we can write the depreciation entry here. By depreciation account, some of the values will be given, and out of these, one value has to be determined. Depreciation was 40,000. Then it is saying in the beginning of the year, an item of machinery was sold for rupees 25,000. So an item was sold for 25,000 means we have to do this bank entry by bank account 25,000, which had a written down value of 20,000. So the written down value was 20,000. You are selling that part for 25,000. So on that sale, you are having some profit of 5,000. So that profit has to be written in this account to statement of profit and loss, because in companies cases the profit and loss account is termed as statement of profit and loss. So the profit earned is 5,000. Now, so the information is given about the closing and opening balances that we have written. Depreciation is given, that we have written. Profit on sale of machinery is given in that way, and the sale amount is given, that also we have written. Now we can check the total of the machinery account. Obviously, the credit side total is greater. That's why we will first total the greater total side, and it will be 9,90,000, 11,10,000, 11,15,000. Now this total will be written on this side, 11,15,000. Out of this total, we will subtract and find out the difference amount. So it will be 0, 0, 0. Then 5, 0, 6 plus 5, 11, 9 plus 2, 2,50,000. So now what this difference will be? Obviously on debit side, if you will see the format, there can be either purchase entry or profit entry or opening balance. So opening balance and profit is there still. So only one entry is missing, that is to bank account. So obviously this entry will be there to bank account. And you can also see practically that my opening balance was 8,60,000 and closing balance is 9,50,000. That means my machinery is increasing. So increase in any fixed asset account will be only because of the reason that you have purchased some sort of machinery or fixed asset. So it is balancing figure. Two lakh 50,000, and that is actually purchase of machinery. So now purchase of machinery will be an outflow and sale of machinery will be an inflow. So for that reason, we will write here, we will calculate cash flow from investing activity. Proceeds from sale of machinery and proceeds are 25,000. This is an inflow. And then purchase of machinery, this is an outflow. Purchase of machinery is 2,50,000. And because it is an outflow, that's why it will be written in brackets, because it will be reducing our cash and cash equivalents. Now out of this 2,50,000, we will deduct this 25,000. So because cash used is more than cash flow, so the answer will be cash used in investing activity. Two lakh 50,000 minus 25,000, it will be 2,25,000. And because it is cash used, that's why this answer will also be written in brackets. So generally main points for investing activity, it will be very simple once you are much familiar with the machinery account, that how to identify the inflow of cash and how to identify the outflow of cash due to the non-current assets. So you should be able to decide about these two things and you will be able to complete your investing activity simply. Now see further, this also there is a method called provision for depreciation method, which you have studied last year. So you should be knowing these entries also. So regarding machinery account, it will remain same. There will be no change for writing the opening balance and closing balance. Two balance brought down, and the closing balance will be written as by balance carried down. Then for purchase, the entry will be to bank account. In this method, you should remember that the asset account balances always show the original cost, because depreciation is not deducted here. Then for profit, the entry will be to statement of profit and loss. Then by bank account, the entry will be for sale. Here instead of writing depreciation, we will be writing by provision for depreciation, or you can write by accumulated depreciation. And then loss entry will be by statement of profit and loss. So these will be the general entries in machinery account. Then in accumulated depreciation, you should remember that the opening balance will be on the credit side. By balance brought down. For current year depreciation, the entry will be here by depreciation account. Then for transferring the depreciation on the sold machinery from the accumulated depreciation account, the entry will be to machinery account or to the fixed asset on which the depreciation has been accumulated. Because in our example we are preparing machinery, that's why it has been here machinery account. Then for closing balance, the entry will be to balance carried down. To balance carried down. So these are the entries in accumulated depreciation account. So from these two accounts also, suppose you are given the information regarding opening balance as well as closing balance and the depreciation transfer to machinery account, then you can easily calculate the current year depreciation first thing. Then with the help of these informations, you will be able to calculate either the sale amount or purchase amount of the machinery, the missing information in the question, or you may calculate the loss or profit on the sale of the machinery also. So some things will help you in calculating the inputs for operating activity. Some are informations are used in investing activity also. Now we will see this question. From the following information, calculate cash flow from investing activities. Opening balances as well as closing balances are given. So machinery opening balance is 4 lakh, closing balance is 4 lakh 20,000. Accumulated depreciation opening balance is 1 lakh and closing balance is 1 lakh 10,000. Patents are intangible assets. Opening balance is 2 lakh 80,000, 1 lakh 60,000. During the year, a machine costing rupees 40,000 with its accumulated depreciation of rupees 24,000 was sold for rupees 20,000. So we have sold out one machinery. Its cost was 40,000 and the total depreciation charge on that machinery from the date of purchase to the date of sale is 24,000. That will be transferred from accumulated depreciation account to machinery account. And the sale amount is 20,000. So we have a lot of information. We can prepare simply machine account as well as accumulated depreciation account. Then patents written off were rupees 40,000 and some patents were sold at a profit of 20,000. So patents also are having information. We will prepare patents account also. Just a minute. Okay. Now see, first we will write the opening balances and closing balances of each and every account to bank account. Sorry, opening balance we have to write, so it will be to balance CD. To balance brought down. Opening balance is given 4 lakh. Then we will write the closing balance after leaving 3-4 lines by balance CD. And the closing balance is given 4,20,000. Then in accumulated depreciation, I will write the opening balance by balance brought down. Opening balance is 1 lakh. And the closing balance is true balance carried down 1,10,000. Then in patents account, opening balance is 2,80,000. Its balance will be also debit balance. True balance brought down 2,80,000. And its closing balance will be 1,60,000. Buy balance carried down 1,60,000.